Welcome to Talk Tickers. We're your quick guide to understanding what really matters in earnings calls.
And today we're jumping into BD's second fiscal quarter for 2025.
Yeah, the initial market read seemed a bit cautious. So our job here is to pull out the core details, give you that balanced picture.
Okay, let's start with the top line. Reported revenue growth was 6%,
Okay.
but organically.
Okay.
That comes down to 0.9%. So yeah, a little under what analysts were looking for.
0.9% organic. What drove that slight miss?
Well, it seems to be mainly dynamics in the life sciences market and also blood culture testing levels coming back a bit slower than they'd hoped.
Right, okay. So revenue a touch soft. But what about the bottom line, earnings?
That's the other side of the coin. Adjusted EPS actually beat expectations. It grew 5.7% to $3.35.
Interesting. So a bit of a disconnect there. How do they manage that?
It really highlights their ability to manage costs and profitability. A huge factor was the adjusted gross margin.
How did that look?
Really strong, 54.9%. That's up 190 basis points compared to last year. A big lift.
Wow, okay. That definitely helps explain the EPS beat. What's the magic behind that margin improvement?
They point pretty directly to their BD Excellence program. It's all about operational efficiency, driving improvements across the board.
BD Excellence, right? I remember hearing about that.
Yeah, and they've really scaled it up. They mentioned almost tripling the number of these internal improvement projects, Kaizens, year over year.
Tripling. Okay, so they're serious about it.
Seems so. These are, employee-driven improvements, small changes adding up.
Got it. So looking forward then, how does this quarter impact their view for the full year? Any changes to guidance?
Yes, they did make some adjustments. Full year organic revenue growth is now guided to 3% to 3.5%.
Okay, trimmed slightly.
Trimmed slightly, yes. And on earnings, the adjusted EPS guidance is now $14.31 to $14.34.
And what does that represent in terms of growth?
Well, importantly, even with that adjustment and factoring in tariff impacts, it still points to about 8% growth at the midpoint.
8% growth, okay. Even with tariffs. Let's dig deeper into that revenue side. Life sciences seem to be a key area of softness.
Yeah, that's right. They saw lower demand for instruments in life sciences.
Why was that?
It looks like it ties back to U.S. government policy changes, specifically cuts announced back in February to research grants. Less funding means fewer big equipment purchases by research institutions.
Oh, okay, the funding environment.
Yeah.
But it wasn't all negative in life sciences, was it?
No, definitely not. They were keen to point out that where funding was available, their win rate for instruments held up well.
Driven by what?
Their flow cytometry portfolio, which is quite innovative. Plus, they got some good news on the China front.
Oh, what was that?
They got their first export license in April to start selling their high-parameter flow cytometers to China again. There had been a temporary U.S. government ban earlier in the year.
Right, I recall that. Any other positives in life sci?
Yes, their reagent sales kept growing. That suggests, that the actual research activity is still going on, even if the big instrument buys are pressured.
Okay, that makes sense. Now, diagnostics, you mentioned some softness there too. BACTEC.
Yeah, the BACTEC blood culture business, it's a bit of a hangover from previous supplier issues they faced.
I thought those were resolved.
They are. Inventory is back to normal. But customers had put conservation measures in place, like using fewer tests, and they're just taking longer than expected to get back to their old testing habits. It's a slower ramp up.
Gotcha. Okay, how about the rest of the business? MedTech.
So MedTech, if you exclude diagnostics and biosciences, that grew 1.9% organically.
Which sounds okay.
But you have to remember the comparison. Last year included a significant licensing deal, so it makes the comparison tougher this year. It's a headwind.
Right, the comp. What else stood out?
Pharm Systems actually returned to growth in Q2. That was driven by biologics, and specifically, they called out GLP-1s.
Ah, the weight loss and diabetes drugs. Big market.
Exactly, and they expect that momentum to continue in the second half. Elsewhere, UCCC kept up its strong double-digit growth. PureWick is a key product there.
And surgery.
Also strong. Double-digit growth for their Phasix bioresorbable mesh. That fits their whole hernia strategy. And the new Phasix ST for umbilical hernias is apparently off to a good start.
Any weak spots within MedTech?
Well, the PI platforms, like infusion pumps perhaps, saw good underlying growth in the U.S., but it was partly offset by China.
How so?
Volume-based procurement in China, basically bulk buying agreements that push down prices, even if volumes are up. So pressure on revenue from China there.
Okay, let's look regionally then. Where did the growth come from?
Organically, the U.S. led the way, along with Greater Asia, but excluding China and Latin America.
And the declines.
AMA, that's Africa, Middle East, Europe, and China, both saw declines. They're now expecting the full year decline in China to be in the high single digit.
High single digits. Okay.
Mm-hmm.
Let's circle back to those margins because they really were impressive. That BD Excellence program sounds like the real deal.
Absolutely. I mean, that 190 basis point jump in gross margin, they directly attribute it to BD Excellence scaling up.
And the Kaizen events tripling.
Right. Those small, continuous improvements adding up. And it's not just staying in manufacturing either.
Oh. Where else is it going?
They're embedding it in R&D now and in their commercial operations too. So the idea is this becomes a sustainable driver for margin expansion and also frees up resources to invest in growth.
Makes sense. And operating margin was up too.
Yes. Operating margin also increased year over year.
Okay. Now, tariffs. Always a factor for global companies. How's BD handling that? What's the expected hit?
They're flagging about $90 million in tariff expense for the full fiscal year 2025.
$90 million. Where's the main exposure?
It's mostly on stuff they make in the U.S. and then export to China. It's worth noting, though, less than 1% of their U.S. revenue actually comes from China.
Okay, so primarily an export issue. What are they doing to mitigate that $90 million?
Several things. They mentioned inventory positioning, optimizing where their suppliers are located, using dual sourcing.
Like making things elsewhere.
Exactly. For instance, shifting some shipments for China away from U.S. plants to maybe European ones, or speeding up work on their own plant in China for flushing products.
Smart.
Yeah.
Anything else?
Yeah. Also keeping a lid on G&A costs, general and administrative expenses, and taking what they called a balanced approach to pricing.
And they're also investing heavily in U.S. manufacturing, right?
Yes, the big commitment there. $2.5 billion planned over the next 5 years for U.S. manufacturing.
Okay. Shifting gears, slightly strategic initiatives. What's happening with the planned separation of biosciences and diagnostics?
Still on track, according to them. They said there's strong interest and we should expect more details this summer.
And pipeline. Any new products coming?
Yeah, a few highlights. The upcoming launch of the first BD FACS Discover Analyzer, the A8 model in life sciences, enhancements to BDRIS in medical, and launching the BD Nexus infusion pump over in EMEA.
Okay, lots going on. Now, we touched on the updated guidance, but can you give us a bit more detail on how they see the rest of the year playing out? Q3, Q4.
Sure. They expect organic growth to pick up sequentially in the second half. So Q3 looking like around 3% organic growth.
And in Q4.
Q4 accelerating to over 5%.
What gives them confidence in that Q4 acceleration?
A few things. They'll be cycling past the APM acquisition anniversary. Continued strength expected in farm systems, those biologics and GLP-1s again.
Right.
They're also projecting high single-digit growth in BDI, partly helped by an easier comparison in surgery, plus more investment there. And in BDB, again, an easier comp, and the launch of that new FACS Discover A8 analyzer should help.
Any update on currency impact?
Actually, yeah. They now expect less of a headwind from foreign exchange for the full year. Maybe around $20 million negative impact, which is better than previously thought.
And tax rate.
Adjusted effective tax rate expected between 14% and 14.5%.
Okay. One thing on margins for the second half.
Yeah, they guided Q3 adjusted gross margin to be about flat year over year, and adjusted operating margin around 24.5%.
Flat gross margin. Why is that after the big jump in Q2?
It's mainly due to planned increases in spending, selling expenses, and R&D investments kicking in during Q3.
Got it. Investing for growth.
Yeah.
You mentioned BD Excellence expanding beyond operations. Any examples of how that's working in practice?
Yeah, they gave one example where a Kaizen event actually sped up a key clinical trial by 4 months.
4 months. That's significant.
It is. Shows it's not just about, saving pennies on the factory floor. It's impacting core processes like R&D. They also mentioned it's improving the employee experience, creating momentum.
Interesting. Are they using AI much in these efforts?
They are starting to strategically mention areas like APM, Pyxis Pro, looking at expenses, optimizing manufacturing lines, managing inventory. But the focus seems to be on using AI where it delivers tangible value, not just for the sake of it.
Right, practical applications. Okay, let's pivot now. It's time for our not-so-traditional segment. Outrageous but plausible trade ideas based purely on this call. Remember, folks, absolutely not financial advice. What have you got?
Okay, idea number 1. Given that pressure we discussed on research funding, which might stick around longer than people think,
The government grant situation.
Right. So maybe you consider a short position on companies that are really heavily reliant on those grants for their main revenue, but you'd want to hedge that, right?
How?
Maybe pair it with a long position in companies within life sciences tools that are showing really strong growth in the consumables and services side. It kind of plays on a potential shift within the sector, less big ticket equipment, more ongoing research support stuff.
Interesting angle. Playing the internal sector shift. Okay, what's idea number 2?
This one focuses on BD specifically. We heard about their big investment in U.S. manufacturing and all the work they're doing to mitigate China tariffs.
Right, the $2.5 billion investment and the sourcing shifts.
Exactly. So an outrageous but plausible idea could be go long BD and pair it with a short position in one of their competitors who you identify as having a much higher concentration of manufacturing or supply chain in China.
The logic being.
The logic being that as tariffs potentially bite harder, or if geopolitical stuff continues, BD might actually gain a relative advantage because of their U.S. focus and their proven mitigation strategies.
Betting on their operational strategy versus competitors. Okay, 2 interesting, definitely plausible, potentially outrageous ideas.
Definitely not advice, just food for thought.
Absolutely. So that wraps up our deep dive into BD's Q2 2025 call. It's clearly a mixed bag, isn't it? Some revenue headwinds, particularly in life sciences.
But offset by really solid execution on earnings and margins, driven by that BD Excellence program, plus these proactive moves on tariffs and strategy.
Yeah, the key things to watch going forward seem to be, will that life sciences market stabilize? Can they deliver on that second half growth acceleration? And how effective will those tariff mitigations continue to be?
Exactly. Lots to monitor.
And remember, those trade ideas are purely for discussion. Please, do your own homework, your own research. But we are curious, what are your takeaways from BD's quarter? Did anything particular stand out to you? Let us know. Join the conversation.